the Russians are very quiet. Wouldn't you start thinking, wait a second, who the fuck leaked where we do have our nuclear fleet?
They all know because it's part of the START talks. They have to be an open view so that they're monitored by the other side. So the
Yeah,
Americans know where they are. They know where the American
yeah, but that's the
aeroplanes
point.
are.
The Chinese know, the Russians know, the Americans
Absolutely.
know.
That's part of the
Why,
nuclear.
how the fuck do the Ukrainians know?
Well, clearly, because someone told them. But
Exactly.
now, so it comes back to it's an interesting thing because, shame we're not on air, but when you said, well, why is, I think this is a fake debate between Trump and Musk. Well, maybe it's to take people's eye off what is the most frightening thing
Yeah.
existing today, which
Yeah.
is we really are very close to someone using a nuclear weapon because you've pissed Putin off so much that he's almost certainly going to say, sign the fucking deal, or I'm going to push this button over to you,
Yeah.
wipe you out, and, we don't get any more threats from you.
Holy fucking shit, it's a dinosaur! Jesus Christ, what the fuck?
Welcome, ladies and gentlemen, to a Grey Market Talk. And this is issue number, I checked earlier, Nick, 67. So we've done that 67 times already. Thank you very much for your time and enlightening me as a humble market maker for options who had enough of this we had it in the green room, just shit going on in the US at the moment. How are you, Nick?
I'm very well, actually. Looking forward to some time out.
Yes, I bet. He's going golfing for 2 weeks. I'm staying with you, focusing on the markets, and that's where we start today. We actually want, before we start with the real stuff, Nick, we have to address it. How do you call it, 500-pound gorilla in the room? It's the 6th of June, and at the moment, Trump and Musk are not friends. But they might be friends this afternoon again. Yesterday, Tesla took a beating of 15%. They were twittering or Xing wild back and forth, Trump in Truth Social, Elon Musk on X. And what's your take on this? Is it just a big show, or are they not besties anymore?
We don't know. I mean, we honestly don't know. We can be conspiracy theorists and say they want everyone to take their mind away from everything else, what might be going on. And so they create this thing. I mean, why not? It's quite plausible. But the absolute aggression that was visible on X, it's just, I must say, I've never seen anything like this. I think Elon was asking for Trump to be removed from office. He's on the Epstein list, all of this stuff. I mean, it's,
Trump wanted to deport him back to South Africa.
That's something that's also I heard, so your mediocre Musk or whatever he called him, blah, 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 go back. And, this is quite heavy. And the stakes are very high for both people. These are very powerful men. Elon is, if America is going to be the sort of continue to be the inventor and the developer of technology, then you need people like Musk, and you can't get, Musk himself offside. So you definitely need him on your side if you're an administration.
Yeah, well,
And for whatever reason, this thing started with the tax bill, or was it the fact that the EV allowance of $7,500 on cars was removed, but it wasn't removed from the oil and gas industry. So the oil and gas industry gets subsidized and EV cars don't, and so on and so forth. We don't know what really triggered this thing and where this thing might end, other than I think when both people, both parties here, look at their respective screens, whatever they're looking at, whether, Musk is looking at his Tesla stock and Trump, whatever he's looking at, I must have no idea. But when they look at it, they say, oh, actually, we didn't really mean it to go that far because we didn't sort of understand the consequences, perhaps. And I think, I'm a fan of them fixing it, having a, sort of, how should we say, they'll kiss and make up. But behind the scenes, they might continue to hate each other. But I think for the public thing, they're going to move forward and convince the world they are back together again. They have to. There's no other choice. And whether that means, just one last thing, whether that means that Elon might get something slip through later on that might be beneficial to EV or Tesla or whatever that might be, that might be the price that Trump has to pay for this, for this settlement. Please.
Well, why don't you ask Trump the next time he invites you to his golf course in Scotland what they were thinking? It's ridiculous, honestly. I looked at the numbers earlier. Forward PEs for General Motors, just about 5-ish. Then you have Ford, forward PE 8, 9-ish. Guess where the forward PE for Tesla is?
Loads.
130 something. So...
when you buy Tesla, you're not buying the thing they've got today. You're buying the thing they're going to have tomorrow. And that's the fantasy with Tesla. And that works as long as you've got Musk in the boat and his connections and his ability to get government contracts and all of this stuff. And that's why people started to get wary. It's the same thing we saw Palantir also fall yesterday, in the same, not to the same degree. But I think they also fell, 5, 6, 7%, or whatever it was, towards the close. So, and it's the same thing. You can't afford, if you are sort of head of one of these companies, to piss off the government that is paying you at the end of the day.
No, especially in Tesla's case. I've seen the satellite images as well as you of all these Cybertrucks being parked somewhere which can't be sold. One of the other incidental little things, I have a car which is a Care by Volvo program, where you pay a monthly rent and they take care of everything, service, insurance, you name it. And I was recommending that to a friend and he Googled it up and they've stopped their service. So it's only in place for existing customers. And I remember I got a diesel for these specific purposes. They didn't do diesels anymore or have stopped doing them. And they're just doing EVs now and complete electric cars. Suddenly, this service doesn't make sense anymore, right? And they stop it, which was a brilliant idea. When you see that, leaders squabble that he's not in the good books of the government anymore. And I don't think the lefties will take him back, Elon. What's going to happen next?
Yeah, well, I don't know who will take him back, but as you say, he needs to fix this thing pretty damn quick, in my view. Somebody is going to shake him in the background and say, "Hey, let's stop this shit and move on."
From both sides, very childish behavior, really.
Yeah, indeed. At the time when Trump is talking to Putin and trying to convince him to do something, and Trump's getting his ass whipped from Elon Musk. You can't afford to do that. That's why, as I say, for both parties, whether they mean it in the end or whether they don't mean it in the end, my expectation is this thing normalizes pretty damn quickly.
Let's come to the real stuff now, because in the green room, you mentioned the point when I said, are they just playing a con game there? Is that the biggest troll ever? My inbox is full of memes. I've laughed my head off already. It was brilliant what came in just yesterday in the course of 6 hours. Bang, 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 one or the after. And you mentioned maybe they want to actually smooth over what is really concerning at the moment. And we saw that the Ukrainian forces attacked the nuclear fleet of the Russians, 2,500 miles away from Ukrainian homeland. And Mr. Köppel from the Weltwoche, the publisher, he had a good analysis, and I want to pick your mind on it. He said, what people forget is these fleets are parked deliberately outside in view of satellites because they have contracts with the Chinese, with the Americans, the Russians, everybody who has nuclear potential. How did the Ukrainians know where they can find this stuff? And if I'm asking that question, then obviously Putin is also asking that question. How's the involvement? How do you see the situation at the moment? Is the fire getting hotter, or is it something we can ignore?
Well, this thing apparently took 18 months to set up. So the information was already made available to these guys a long time ago. And so that's previous administration. I don't know whether you're going to sort of expect now people to start looking within the Trump administration, whether there's new information passed on. But I think this is probably the old administration that was still working in a kind of an anti-Putin world. But it is the most dangerous situation, and everyone's running around doing high fives. Oh, have a look at what we've done. But the reaction from Putin, and he almost phoned up Trump to get permission to retaliate, and just to say, hey, that cannot be, that we cannot let that stand. And so to what extent he retaliates, we don't know. But, I think they've got to a stage where he said to the Ukrainians, sign this deal or else. And I think the or else is still to come. And, we sort of talked coincidentally, whilst this or else thing is potential, there's the Elon and Trump spat in the background just to take everyone's eye off the most important thing in the world right now, which is...
Yeah, absolutely. Because even if it was under Biden that they gave the information away, I cannot believe that the Ukrainians would launch an attack like that without asking the Americans for permission.
Well, that's an interesting thing, whether you ask your Americans, whether you ask Europeans, which is also quite feasible.
Sorry, who would you going to call that?
I honestly don't believe that that Trump would have given permission for them to do that, knowing the consequences, which are, Trump did also threaten Putin with it or else, but I honestly can't expect that he's going to have some kind of peace treaty with Putin in this state now, because what he's effectively let Putin reach now is an agreement at a later stage, probably in this year, which is much, much more in favor of what Russia was after today. So I think in 6 months' time or whatever, they'll come to a discussion, because it's clear that it's not going to stop anytime soon. And Russia is just going to give a list which is bigger than the list he just gave Trump. And Trump's going to say, tick, done, 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 done. And so in retrospect, I must say, I don't personally think this was a clever ploy from the Ukrainians. It was a 5-minute victory, and but they've sort of, that was their last thing.
I always have this thing. I'm just not smart enough to see what's going on. A couple of years ago, you remember that this book, The Sleepwalkers, came out. It was very popular. How all the European nations, and including the Americans, slipped into World War I, and was based on Barbara Tuchman's book, The Guns of August, which she'd done the research in the 50s about. And before that, I always thought, okay, there were big geostrategic deliberations which were going on, and then there were conscious decisions to do this, that, and the other. If you read just these two books, you realize, nope, they were just bumbling along. And then suddenly they had the mess nobody wanted. And I'm a bit worried about that this could be the situation we have at the moment, especially looking at the caliber of all our leaders in this game. Holy moly.
Yeah, indeed. And, we have to, and Trump needs to have his eye on the ball and not on a spat with his old mate. So he needs to be on top of this problem, very much so.
So that actually, to put our mind to something more positive, if we can talk about that, the bond market, if it's more positive. In the past, we always the nations took out big debt when they went into a war to finance all the bang and the killing and you name it, and had a huge debt. And when the war was over, it was eventually worn down. We are in peacetime, and we have the highest deficit in the United States we've ever seen. Never mind talking about the European nations we have here who don't even have armies that function. So what is the situation if I look what's going on especially in the US bond market at the moment? Everybody's talking about the vigilantes again. We spoke on this channel, in length, about what is the risk premium would want to have. Then you have the other guys just waiting for a failed treasury auction in the US. You have Besant coming out talking about this, that, and the other. It's not a MAGA problem, it's a MAG 7 problem. And give me a view about the bond market, especially in the US as the leading bond market. What's going on there? And do we have to worry about fast rising rates, or is it again one of these opportunities where you could say, yeah, let's buy something now?
Well, I've already bought something now. So, and I've, made a recommendation to my clients not to be short. Not certainly not now. I mean, we talk macro a little bit further down the road. Almost certainly, you can imagine people are going to expect rates to be higher because growth. I mean, what drives interest rates is economic growth. So, if you think about they want to achieve a real GDP of 2.5%, 3%. I think 3% is the target of Besant. They're going to have inflation of 2%, let's just say, but 3 plus 2 is 5. So that's where you would expect rates to eventually find their way. But in the short term, I've been a fan of, there needs to be a catalyst for something like this. I don't think there's a catalyst right now. And I've been sort of saying to, my people that rates are likely to stay in this sort of 4 to 4.5 range. And, they have stayed in the 4.5 range. They slid slightly below 4. They went to about 387, 385, something like this. They slipped above 4.5%. It went to 455 and come back down again. And my view is we're in that sort of phase where we're probably heading towards the low end of that range before the next move up. And the next move up is really probably driven by stable economic growth in America. And I think stable economic growth calls for higher yields. But, and here's the big but the Americans can't afford it. So, and potentially bad things happen in credit when rates are much higher. So then you have to say, so two things. One, credit doesn't like, or small caps and private credit don't like rates above 5%. And second thing is the US budget deficit isn't going to like paying even more interest rates. So the average interest rate at the moment that the American government pays 3.3. Well, that average goes up. Yeah. I mean, by the day, because as things mature, sort of we've got sort of things with higher yielding right now. So when they issue, they pay much higher rates. So they cannot reach the point of fixing the budget deficit whilst they've got $1 trillion a year interest charge. So they need to get two things. One, Elon wants them to cut spending, but actually what they need to cut is interest rates, right? They cut interest rates, they cut spending. And how do you cut interest rates when you've got a theoretically independent Fed? You can't have an independent Fed. Or you've got to have a Fed that think more aligned to the government. So people call it fiscal dominance and all of that. So the decisions about interest rates have to be about keeping interest rates in check, because the government, at the end of the day, do not want to blow out their budget deficits. And what are the other consequences of higher interest rates? 40% of the market is owned by foreigners. So 40% of $1 trillion goes that way. Who's going to be happy about that in Congress? Nobody. So how do they deal with this thing? And that's where, you start to think about fiscal, not just fiscal dominance, but you also think about the Fed have to come in and do that sort of very famous Japanese cap, as it were, somewhere, and say rates ain't going higher than this, and they just have to keep buying to stop interest rates from going up. I'm sure there's another way to force other people to buy it, savings institutions, Harvard University, to keep their tax states, whatever it is they do. But they have to fix that problem, and that is a problem that's going to come to bite them later on. I think for now, the direction I think is lower. So I think we head towards that low end of the range. But I think thereafter, as the policies of deregulation and suddenly all of this uncertainty that sort of hit the market in the last few months, which we spoke about late last year.
Yeah, well, hey, Bill and chill since January. What are you going to do?
So rates come. And as I say, this uncertainty moves away, and people start to get confidence, and people start to invest and build these factories that everybody wants in America. So that's going to raise interest rates in itself, and then of course that's going to raise the level of cost for the for US government, and then they have to think about what they do about that, because that is the bit that that Besant wants to control, and he wants to control it. He says lowering interest rates and having strong economic growth. I'm afraid the two things don't go together. So he's got to think about whether or not they want a friendly at the Fed, or whether they want to remove the independence. And that's a discussion for a later day, but I think it's going to happen.
Because what's in that big, beautiful bill, the bits everybody's talking about, yes, they want to give a tax reduction, but they are increasing the deficit again. How does that all square off? You can't have cheaper interest rates to refinance yourself at the same time if you're just pissing money away and you're not doing the cuts. That's why I get Elon Musk to say, yeah, fine, we have to do something. Reducing bureaucracy, all fine and good, yeah? Tell us about it in Europe. We could need some of that. But at the moment, they seem to be caught between, the English saying is, between a rock and a hard place. How you get this thing solved. And then what we started with, if they have not a hot war, but a warming up, which needs more defense spending in the United States, how on earth are you going to sustain that in the US? That would be even an attack. We looked at that a year ago. The debt ratio of Russia was something around 30%. That's it. Yeah. And they're sitting on piles of gold. If I would have a retaliatory attack, I would do it on the equity market or on the bond market in the US. You can pull that down like a house of cards, I think.
I think the problem for defense spending is likely not to be from the American side, because they've been spending upwards of 800 billion a year. That's been increasing, obviously. So, if you think 500 billion, 550 billion, 600 billion, over the years, whereas you look at the Brits, the Germans, the French, they've kind of just relied on the American spending. So at the end of the day, God forbid anyone needs this stuff, but if there is a decision to up defense, that will be done in Europe, and it won't necessarily be done in the US. That's for a later day, because I still remember, and I don't know whether he wants to stick with this thing that Trump said along the way on the campaign trail, or at least when around the inauguration, that he wanted to get Russia and China to halve defense spending. So this is another way where Trump effectively saves in the future for these deficits. And remember what Scott Bessent said. He wants to grow the economy faster than debt is increasing.
Yeah.
Well, if you want to do that, you have to control the levers to growth. You have to control that cost, which is the interest rate cost. And my conclusion for that is no independent Fed, or a friendly at the Fed. In other words, you have the power to hire and fire, and you hire your man in June, and he's going to take over in April next year when Jay Powell leaves. But he's the decider, and he's a Trump man.
So could we get a bizarre situation where actually the American economy starts faltering? I've listened to a podcast yesterday, I think it was, the lady who's running the consumer sentiment office in Michigan. And the consumer is bombed out. I had that with Murad on Murad's Monthly already, looking at it. And the question is, if the economy starts faltering and the Fed is refusing to lower the rates for whatever reason, then they're in a right old pickle, aren't they?
Well,
would I buy bonds then? That is actually my question.
They would be. So the University of Michigan survey is, I looked at this thing. I tried to look at it in some depth, and I came to the conclusion that this really was influenced by party lines, and that's the kind of soft data you ignore. And so, I've told my people, forget that number, not interested.
But it's forward-looking soft data, right? When they look at the hard data, it's always in the rear-view mirror. Oh yeah, economy did this, that, and the other. There you have a bunch of people, because what's going through my mind is this: could we get something like a balance sheet recession on the US consumer side as well, that the consumer who's stretched to the limit is simply refusing to spend money.
So I don't remember ever the
Americans
American
not spending money.
consumer. I mean, really, you know, when these guys are sort of really down in the dumps, they go and spend. You know, the spending is the solution to you know, bad times. So, you know, to go and borrow some more money. I'm not of that fan, not in that view. I don't think at the moment that there is a likelihood of recession, weak economy, and all of this stuff. There is, you know, the government throwing money, as much money as Biden, if not more, right, into the economy. They are reducing, so we still haven't spoken about this, regulation, right? Which is the three prongs of their policy,
Yeah.
you know, the tax thing and so on. This third piece, which is the so tariffs, tax, and regulation, could be a major thing. I mean, imagine, really. I mean, what do we complain about in Europe? What is the thing? We say, well, there's too much regulation. So companies say, well, you know, I have to do this and I have to jump through these hoops and it's very difficult and so on. And in America, they are trying to make things a lot more smoother for people. They may even attract, they will attract people from Europe purely and simply because of the reduced regulation they've got to go through. And that's a very positive thing as well. So at least in the near term, I don't see the risk of a recession. I see, you know, strong growth ahead. So then we come to the, you know, what does that mean for markets? I see new highs, therefore. But in the near term, and we spoke about this on Monday.
Yeah.
One of our friends said, you know, he thinks that the market might sell off a little bit, and I think, you know, he's right. I think from the chart, it looks like we might have to get above 6,000 first. But I'm of the view that thereafter that we're going to see a sell-off to around 5.7, or, you know, back to these moving averages and that kind of level, 5.6, 5.7, maybe 5.5. I don't know. And what's ahead of us from a macro thing? On April the 9th, we had our 90-day pause. Well, 90 days is July 8th, 9th, something like that. Well, and I was at a CFA conference yesterday, and I was reminded that in that 90 days, there's only one trade agreement, and that's with the Brits, right? So in 90 days, they have succeeded in getting one trade agreement. Well, what do you think that means now for after 90 days? Well, then, you know, the guy who just slagged off his best mate at 2 o'clock in the morning, as he does, he's going to start hopping mad, saying, well, the 90 days are over, right, we're going to. So you may well get some noise, is what I'm suggesting, or what, you know, the speaker was suggesting. I think is very plausible that you may get some noise around that time or before that time as people start to think about those 90 days. And maybe that's the catalyst for the weakness that we may well see, you know, for a few hundred points in the S&P. And it's just the weakness that's meant to be bought because, as I say, I think the economy is still in good shape.
Yeah, well, if I look at the market at the moment, we have, of course, the technical factors, and everything looks poised to jump up, and everybody sees that as well. Then we have the mechanics in the market. At the moment, the market is running a bit sideways because we have these huge gamma long positions at pretty much 6,000 and 5,900. We're tagging along, but there is one big level at around 6,050 in the S&P where all the stops are going to be triggered. So we're going to see that most likely, yeah. But the question I'm asking myself, is that then the run, or is it a bull market again? Is the correction over? And is that by conviction or is it by resignation, what we're going to see there?
So, I mean, if I were to sort of finish off the lines on my chart,
Yeah.
I think we are in a sort of the first leg of this move from April the 9th. I think that finishes around, you know, between now and noisy July the 9th. And I'm feeling that that the 60 just between 6,050 and 6,200 is probably going to be the high. But I don't know how far this thing will go. So what have I done? Bought some cheap protection. I mean, vol's quite cheap. So buy it till, middle of July. Was it 18th of July expiry? Go on holiday, play some golf, and sit there with your longs and hedged. And that's basically my approach. Because I think that's where we are. That's the first leg, has to finish. Then we correct wave 2. And we correct 5, 6, 5, 7. And then we continue as the policies start to gain traction. There's no trade war. Chinese and America sort of kind of settle things. Russia has quietened things down in the region. Iran get an agreement and so on with Trump. And then suddenly that's the third wave. That's the sort of thing that takes us to 6,500. And then, we do our squiggles and then we go. What is it that's sort of telling me that we're in the last leg of this first wave? And that is a technical thing more than anything. There is some negative divergence between, price and momentum. Momentum is waning. So whether that sort of leads to a sell-off or not, or just sort of, recovers an overbought market, we still don't know. But my tendency to believe is that sort of fifth waves are, you see them with negative momentum. So you see price up, momentum down, and that says wave 5. Look for a top somewhere. And so I kind of think that near-term top 6,000-ish, don't know, come down 5.5, ship it in, do it again.
That reminds me of a story I read, and maybe I've already quoted it here, so humor me if I repeat it. George Orwell had an interview in the 50s with some commissar of the Soviet Union and was confronting him with all the atrocities that happened all over the place and the lack of freedom. And the commissar answered at one point, well, sometimes you have to break some eggs to make an omelette. And Orwell looked at him and said, yeah, where's the omelette? Yeah. And this reminds me of Trump. I'm not a Trump fanboy, but I like capitalists in charge. And I thought, okay, fine. Yeah, he's using all he has available and wants to make changes. But the only thing I'm seeing as a discerned investor at the moment is this: we're doing this, then we're not doing it, what you just mentioned. Yeah? And then we're coming in and then we have a squabble. And at the same time, we're not really solving the problems. We always tell people that we have the greatest solution for everything, but they're not really coming in. At which point does the market say, you know what? I had enough of that. I don't have to buy the longest duration assets that there are, all the techs, all the lovely thing they have in the S&P, and simply say, okay, I lean back and I wait. We are expensive here anyway. And if you can't actually deliver the omelette while breaking all the eggs, there's no point. And I'm concerned that we're more and more, I see it in my mindset, moving in this direction where I think, yeah, what's the point in it all? Yeah, I might as well lie back, bill and chill, and wait till it's all sorted out. That might take half a year, that might take a year, it might never come, and we have a huge correction. So you speak to a lot of professional investors. I know they have to be invested, and I know they have to put their money in. But do you see any tendencies there where they are shifting their allocation to the bond side, or what's the situation there?
I think everyone's got the same view on bonds, right? And if when rates started to go up, of course, every YouTuber, rates, the bond market, they're losing control of the bond market, all of this stuff you see from even quite intelligent people, I must say. And it's a bit of a shame that they do all of this stuff. I think it's not helpful. And so I think there is a tendency for institutions to follow this type of thing. I mean, let's look at our most famous researcher, Jamie Dimon. Yeah, I mean, so Jamie says, the bond market's going to break. What does that every time? Yeah,
but the bastard's always hedging. Yeah, it will break maybe in 3 months or in 30 years. Oh wow, great! That's a forecast and a half.
I'm glad you said that, not me, because I was going to say that ever since I know he's made a big call, the market did the opposite thing because he is most likely the other way. So, that's all I can say is That's just history has proven. So at least for now, and I think that there is a tendency for everyone to. So the street view is probably short treasuries, and I think they are going to get hurt, in my view. And so I don't recommend that, and I actually recommend longs. And if also the cycle position, we have to sort of think about how the cycle operates. There is a lot of tailwind for treasury bonds right now, and whether you believe in these cycles or whether you don't believe in them, sometimes they do on time and sometimes they don't, but they exist. And at the moment there is tailwind for bonds. So I'm certainly not short for bonds. I think if there's anything, I mean, as you said, bill and chill. Well, how about sort of, going a little bit further down the curve a little bit and make some more money on some duration, so try to be a little bit more, more than just a T-bill. Let's try and get some
that would have been my next question. So we're rolling up the curve, yeah?
I think we're heading towards 4% for the 10-year. I've been wrong before, but we came from 4.55, and I basically said, this is now we're going to go back down to the low end. Don't know where the low end is going to be. It could stop earlier, could stop, down to 4.25 again and sort of dither. But, we've made almost 20 basis points from that level. And I think there's more to come. And I think that more to come is the thing that will shock the markets more than anything. And perhaps that's the catalyst for this sort of the final push up. I mean, it's very difficult right now there's no momentum yet. Prices are trying to go higher, but they look around, they see the fighting, the infighting, the potential nuclear war over, and they say, well, do I really need to buy this up? And what they need is some kind of good news from the bond market, and perhaps to say, okay, well, it's a reason to go over 6,000 now because rates are lower and it's sort of everything is fine and everyone believes in the government policies and it's a good thing. So I think that's going to happen for a while. Don't know how long that lasts. Let's just say we head down to the low 4%. But then things might start to turn a little bit negative. And so timing. Our game is timing.
I just said, look at the move index. Only one direction down, yeah? So definitely volatility on the bond side indicates that your scenario could be a likely scenario.
Yeah. I think so, and it was a shocking call when I made the call, and everyone said, "But hang on a minute, Nick. Surely." And yeah, I mean, of course, when you're hounded by Wall Street researchers who tell you that this thing is broke and go to YouTube and everything is kaput and whatever, it's a load of nonsense. Is all I can say. I just think these people should ignore them, save money.
So, what does that all say for the dollar? You discussed that on Monday in our internal group. Like to share your thoughts here for our YouTube audience.
So, I mean, we were talking on Monday a little bit about, gold and silver and all of this stuff. And I said that I was long silver against gold.
Seemed to be like a good call, taking into consideration.
Yeah, I mean, it's worked extremely
straight
well.
After our call.
Look, I mean, it was 100 for this ratio. I don't care where you are. I buy this thing, right? And on top of that, well, the reason to buy gold is, in my view, now fear of war. If there was anything, then fear of war. It's not monetary hedges, right? So it's not these monetary hedges that everyone has been, we talked about that a year ago. Because there is no central bank sort of pumping liquidity. There's no new money, everyone's doing QT still. The bank, the only people who are sort of doing something are Chinese. So there is no monetary thing. This is a war fear, right? But nevertheless, I still say that in such an environment, it raises or gives you an opportunity, and that is silver can't lag so far behind. So therefore, I bought silver and I sold gold, and I bought silver outright as well. And then we talked about, well, what is this? Why is this all sort of going up? And I said, well, the other driver of this thing, of gold and commodities, is a weak dollar. So we've had a depreciation dollar 7, 8, 9, 10%, from the highs since Trump came in. And, that was the wish of the administration to weaken the dollar. I mean, it's an easy thing for them to do. They've managed to get it down to around 99, 98, wherever we are now. There's a little bit more to go. 94 was my call from 18 months ago, or I did a chart on a basis at 94, and of course it was going up, and there was everyone that said it's nonsense. But I think 94 or thereabouts, a little bit weaker than where it is today, probably gives the administration sort of less headache. And then, of course, right, the dollar bottoms, and then if they don't have a war, then why do you need to buy gold now? So, and if the dollar starts to base and starts to sort of see a low, so I'm not really a fan of this this play, a little bit lower than where we are now in the dollar.
You just mentioned gold. Obviously, yesterday with Elon and his bestie, not just Tesla was being slaughtered, but also all the cryptocurrencies were being slaughtered. What's the connection there? Just shaky hands who are playing this whole Elon thing, or are we still, because I have guests on this channel who are big crypto investors, and one of them, you can watch a video here with Dr. Achim Illner I had a month or 2 months ago. I spoke to him recently. To his credit, before we had the huge recovery in Bitcoin, he barely could walk from strength in this market. What's your take on Bitcoin?
Yeah, I still maintain that we haven't seen the high in Bitcoin. I spoke about Bitcoin yesterday with Harry, and I said wave 2. So just expect earlier than where we see that wave 2 in the stock market, some correction in Bitcoin, and that could go down to around 95, 96, 97,000, something like this. But for people who have held this thing in the darkest of times of crypto, we don't care about stuff like that. I mean, what I actually have done on a trading position is to sell a put and sell a call. So I'm long in the trading book. So I sell a call, go on holiday, don't care. Sell a put, you want to give me more? You took me out of stuff already. Give it back to me. It's okay. So that's my approach. I've got no problem buying lower, and I've got no problem taking profits on my stuff in trading position. But for
everybody who wants to look into that, you're doing that through EBIT now, I guess.
Yes, your recommendation, I found that absolutely, it's a great toy. It really is, because previously, the stuff you buy and on the exchanges, wallets and all of this stuff, you can't really do anything with it, and it's not very sensible to trade it, because in Germany, of course, if you hold it for a year, it's tax-free. Whatever gains, if you have a gain, I mean, if you have a loss, it's also tax-free. But at the moment, so why play around with a strategic position? Your tactical position, which is my trading book, if you like. There's a great opportunity because, as you say, volatility is very high. So I took advantage, made some really good money. Thanks for the tip.
That was mine. Bully. You also know him from the channel. Everybody who's viewing that.
Well done, Bully.
He drew my attention to it because everybody's about monetizing Bitcoin and monetizing volatility. And I said, look at the skew there. You even have a term skew. You have the call skew in there. It's just beautiful for these shenanigans, especially if you believe in the function of a Bitcoin for the future, which I'm still not sure about it. So I stay out of this. But I like the option trading part of it because you can really do things with it.
I'm also leaning, as we enter the final phase, if you like, up to the target and whatever that might be, 135, higher, lower, don't care. But, somewhere between July and September of this year, we may see a higher. The transactional sort of, what is Bitcoin today is, we store a value. It's a bit like gold, but have I use gold to go and buy stuff? No, not at all. So I just, it's just something that goes up. And it's the same thing with Bitcoin. So, the use cases is going to come through this stablecoin development, which is, the most interesting part of things. And And that might be the catalyst for these altcoins, the XRPs, the Cardanos of the world, where they might see their true worth. But that's still a long time to come. But the US has, or is in the process of, or has finalized stablecoin legislation. And I think that will be a really great thing for the crypto market. And then we see whether this thing develops, because up until now, this is phase one. So we're going to have to really see what happens in that next phase. Yeah, and I think we have to, it's a watch and see for me.
Then let me have one final question, because that's one of my new pet theories. Does it Germany? We usually don't look at Germany. And of the G20, I just got that today, a little chart. Germany is the last in economic growth within the G20. And the DAX is going from strength to strength. Could that be a new thing? Yeah, well, not really a new thing. Reminds me a bit of Venezuela. The worse and shittier your economy is, the more you have to buy the local index, until you don't. But huge potential to the upside, because they're just spending money and nobody cares anymore, and there will be government contracts fed on the ground, and the currency, being the euro, will have the death bell eventually at one day, if they keep on doing the policies they are doing now. Are clever investors simply say, I take assets on board because I don't worry? It's like Weimar Republic, it's like Venezuela, it's like, as long as I own assets, nothing can happen. And the smart guys do that in Germany?
Well, I think Germany benefited from a lot of this rotation out of the US. We talked about that also before it happened. The US has lost, was it 15% to Germany? And I think that rotation has helped the German market. Whether there is a rationale for that to continue in a scenario where the dollar bottoms out, let's just say 94 in the Dixie. So when I said 94, I meant the DXY. I don't know if I was,
I think everybody knew that.
Okay. So a little bit weaker. So we're very close to that point in the currency where, do you really want to sort of wait for that last push lower, or are you going to start to reverse your position? Because at the end of the day, the rally in the price of German stocks, and I'm not a deep analyst into the German stock market, I must say, so maybe it's a load of rubbish, but the rally is driven by multiple expansion and not on revenue growth, profitability. Yep. So although we talk about exceptionalism has gone crazy, 75% of the world stocks are US stocks, and Germany is only 18%, I think was the last count. Yeah, for a reason. Right, because the American companies make money, and they are developing, and they have less bureaucracy, and yeah, I mean, so they've benefited from this thing. We have this wobble at the moment, but I think that wobble is not something which basically says, all right, it's all over now, right? Except the dollar is broken, all these videos you see. So I think this is just a temporary thing. So Germany has benefited from that. And I don't know. I still question the long-term, future for it. So making tanks is not necessarily something that is a big growth driver. So we have to see what they do with the $1 trillion worth of increased debt. I mean, I hope they use the money wisely, but at the moment, I actually see more headwinds for Germany. And if you look at the cycles have peaked for the DAX. So, I'm looking for a point on the DAX to sell that one. And, this rotation is very close to being over in my view.
Yeah, no, thank you for that, because I'm itching to do something on the short side on the DAX, but I've been wrong before. Yeah? I didn't see this move coming up. Let me sum up for what and you correct me if I get that's wrong. So you are positive for US bonds, at least on the medium term, and you recommend rolling up the curve. Yeah?
Yes,
make some more money right there. S&P, you see, we might get toppish at around 6,000, where we almost are right in this scenario, and then see a pullback. You're bullish on silver.
Yes.
Because they have the ratio. You're still bullish on gold, so you wouldn't do a spread going gold short against silver long.
Yeah, on that point, we didn't talk about the actual direction of gold. So I've been wrong on the direction, because I've been a believer that gold will head down to 3,000. And it's been doing a lot of sidewaysy thing, while silver has been improving. I'm still of the view that gold is a little bit overpriced, but the long-term price on gold is 4,000 plus. Yeah, I mean,
I agree with you. I sold a couple of call spreads at the top levels where everybody is in the market, but sometimes, even if everybody's in a trade, it's not a bad trade.
I sold my gold miners because I heard there were a lot of people who are now bullish on gold miners. I've had these things for 10 years, and
everybody and its stock at the moment. Oh, GDX juniors, just get in there.
It might be early, but I've had a great profit on these things and say goodbye to them.
So Bitcoin, we are in a bit of a correction, but it could bring us eventually to 130.
Yes, it's not over with Bitcoin. And again, the ratio of gold to Bitcoin sort of makes Bitcoin still look fairly cheap. I think the ratio is heading towards 45, and it's been sort of stuck at this. When I sort of suggested that was at 29, and I think recently it was at 33, 34. So I think this thing heads towards 45, 50, let's just say. So if you think about gold at 3,000, 50 times that for a ratio, that takes us to 150,000. I think it's a little bit less. That's why I said 45 as a ratio. I think that's basically where we end up. More Bitcoin than gold in the medium term as well.
Good. I think then we've got it. For all our viewers, obviously, this is only our informed view until hopefully nobody starts
entertainment.
Yeah, until nobody starts a third world war or Trump falls out of the bed and starts an amazing tweet again, which could move markets in both directions. Who knows? We are at the moment at the stage. We had a show a couple of weeks ago where I said nobody knows. We're still, unfortunately, in that period. But
more than a couple of weeks ago, it was before. It was in February time or something like this, where we said nobody knows, and then nobody knows.
But we were godlike. We also predicted end of the Goldilocks scenario. So fine, it went right. But sometimes it's simply this: you work with information where I think that makes sense. I can follow this, and the market then usually goes in the direction of what makes sense. Because people like us sitting there pulling the triggers, doing it as well. At the moment, especially over the last couple of weeks, I have this feeling like I don't really know anymore. Let's just rely on the bell curve, 70%, somewhere in between, and trade some options, hold the risk relatively small. But I would like to invest, long or short. Who knows? Anyway, Nick, thank you very much for your time. I think our viewers enjoyed our Grey Market Talk number 67. And let me have one final plug. We are on the 6th of June at the moment, recording this. And on the 21st and 22nd, our colleague Murad is giving a seminar on the relative rotation graph, which means momentum and relative strength in markets, how to analyze it. 2 days in Hamburg at the Mövenpick Hotel. I'll link the presentation with information about it right here. And if you find the time, find that interesting, and want to see Murad's monthly 2-day live show, I'll be there as well, especially on Friday evening in the bar. Please join us. Nick, any last words?
I'm sure that's going to be a great event. Not to be missed.
I'm absolutely certain. Everybody loves Murad. And we are holding it in German, obviously, not in English. Even though Murad could also do it in Turkish. But hey, eventually one day in the future. Nick, thank you very much. Have a beautiful golfing holiday. And I see you soon on this channel when hopefully things have turned out a little bit clearer for the market. Thanks for being our guest today. Bye-bye.
See you. Bye-bye.